There's a couple different ways to use them. A lot of traders use them to try and trade in between, buy when it hits the lower band, sell when it hits the higher band. That's one way to use them. Another way
Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by Charles Schwab. We have Greg Michalowski on the line, and he has a new job he's going to tell us about. He is Director of Client Education and Technical Analysis at ForexLive.com. Greg, how you doing this morning?
Doing well, Joel. Thank you for having me.
No, our pleasure. So tell us about your new gig here and what your duties entail.
All right. Well, I've always been a big, huge fan of Forex Live, as I'm sure a lot of your listeners are as well. And they've had some new changes going off on their own here, spinning off, and they asked me to join up with them, and I'm thrilled to be joining the team there, and as the Director of Client Education and Technical Analysis. I feel, or they felt, and I do too, that educating the Forex client is an important thing, and so I look forward to bringing new things to their website, and to just enhancing it even more than what it already is. So I'm very excited about the opportunity.
Okay, are you going to be running like individual classes and seminars and things like that? How can people take advantage of your expertise?
Right. Yeah, that's where we're going. From webinars to seminars to doing more video for them and building up that side of the business, and a little bit more. Forex Live has been a lot of like quick bursts of information, and what I hope to do is add a little bit of more, education, a little bit of more of my 28 years experience in the posts that I put up there. So it complements the fast pace of the headlines with a little bit more of what you should be trying to do and why, from a technical perspective mainly. But I also add a few little fundamental biases into it as well. So that's the plan, and we're really excited about it.
Okay, now your technical analysis education, that applies to more than the Forex markets, right? You apply that to like stocks and futures and indexes as well, or are you just focused on the Forex market?
No, we get some questions about things like the S&P, and and so I did a piece on the S&P the other day when things started to unravel a little bit, and you should be surprised, Joel, how markets in general, or not more in general, in fact, there are traders out there who just love to define risk and limit risk against some, technical levels that are very and using technical tools that are very similar to the ones that I use in the foreign exchange market. And so when the like I use a moving average on the hourly chart, and the 50 and the 100 bar moving average, and lo and behold, when the S&P corrected up a few days ago after the decline, we went right up to those moving averages, held it, and then yesterday we had a big, huge move to the downside. So that was a sell area from a technical perspective, and it plays through in the foreign exchange market as well. Those moving averages and trend lines and all that other stuff. So I hope to do that as well at Forex Live from just satisfy the client's demands, and from a technical perspective, and give them a little bit more education about what they should be trying to look at and how they should approach their trading.
So you have basically your one approach with the moving averages and the trend lines, and you can take that approach and apply that to foreign currencies, indexes, or maybe individual issues, or do you kind of change your method of analysis as you switch from, let's say, dollar currencies to the stock indexes?
The only difference I do in stocks is add a 50-bar moving average to it. I use 100 and 200 in foreign exchange, and I look at the hourly chart mainly and the daily chart. And it works nicely in the stock markets as well. I use trend lines, I use Fibonacci retracements, and I use those moving averages. And you know, my methodology is based on a lot of things, but there's a lot of tools out there that you can apply to any chart. And if you overdo it, or you overlap, or you have just too many things, that just increases anxiety, increases the potential for conflict, and traders need to move away from that, move away from this fear idea, and get to something that, well, here we are at a key level, a key technical level. The 100-bar moving average and the trend line is right on top of each other here, giving me a strong sell opportunity. And either I'm going to be right or I'm going to be wrong. And if I'm wrong, I'm going to lose a little. If I'm right, I'm going to make more than a little, is what I like to say. And that's the spirit of my methodology. And I think it applies to all types of markets. So you'd be surprised. I did a thing on Tesla a week or so ago, and you would think that Tesla, with all its volatility, would not be supported by things like technicals, but it is the fact that it is so volatile that technicals play a key role in it, in defining risk and limiting risk. And traders love that, or smart traders love that, I feel, because they're more concerned about preserving their capital, not losing it, but preserving it, and technicals allow you to preserve capital.
And boy, you've taught, mentored thousands of retail traders around the globe. Could you just talk about a couple of the important tenets that when let's say someone's a novice, they want to get involved in retail trading. What's the first couple of things you really try and pound home with them?
Try to keep it simple. Everyone knows the KISS principle, and most people say keep it simple, stupid. I say keep it simple to be successful. And that kind of gets on the other thing about being a little bit more positive in what you think, what you're doing. The other thing is a lot of traders, and I get it all the time at Forex Live as well, where they'll tell me that they don't like the euro, and they see it going to 123 or something like that. And I'm like, well, what about this level in between there? So they're focused on reward as opposed to, a big reward, as opposed to like taking steps. When you walk, you take one step at a time. When you trade, you should go from this level to this level to this level. And if it gets down to 123, all the power to you. But you still got to get through the 61.8% retracement. You still got to get through the low from November of 2012. You still got to get through this level and this level. And so many traders look too far ahead and look at this grand pot of gold at the end of the rainbow, and they're forgetting that there's a lot of coins along the way that they need to pick up and get past in order to get there. The other thing is, I speak about reward and the focus on that reward, that the money at the end of the rainbow. My primary focus is on risk. And if traders just focused on the risk side first, that being the primary thing that they should be focused on, they are either going to, and they define the risk and they limit their risk using a tool, or, I use technical tools. And so you want to define your risk and limit your risk. And then that either you're going to lose that amount and you're fine with it, or the trade's going to go your way, and you have the potential to make. And then you start to manage the trade a little bit further, and as you manage it, you still define and limit your risk along the way. So risk, to me, is the most important thing for traders. The next is targeting steps along the way. Don't look for just get there one step at a time. And if you do those steps, then you manage your risk at the same time. You reach step number one. Okay, there's a time to move my risk down. Reach step number two. All right, do I move my risk down? And you progress, and you'll find that you'll catch trends. Trends are where the most money is made. You'll stay on trends. Your fear will be down. All those things contribute to a positive trader, and also contribute to the bottom line in your account.
Yeah, I think Herd Capital is in here, and it's just alluding to the same thing there as far as some of the keys for success for new Forex traders. And he wanted to ask, do you find that new traders try to use too many indicators?
Yes, it's human nature, Joel, to learn. The more you learn, the better off you're going to be. I mean, I think that's kind of like something that a truism that a lot of people believe in. And so new traders go out and they sit there and they try to learn all these things and then apply all the things. And I think that's going to be a benefit to them. Well, there's these margins. Each thing you add, the marginal benefit may not be a benefit. It may be a negative, and I find that's the case. And so it's okay to do that. I did it, but I've had 28 years to realize that I don't need all that stuff. You don't need all of it, and so I want to cut. I want to take a retail trader and say, all right, we have all this stuff. It's great that you know about Ichimoku clouds and all this other stuff, but and that's good, and all the candlestick patterns and all that other stuff. But at the end of the day, you want to try to keep it as simple as possible, keep your mind clear, understand where your risk is and define it. And either the market's going to agree with your decision or it's not. And it's really not up to you. It's up to the market, isn't it? We can't move the market one pip. The market has to believe what we see and what we do. And so just narrow it down. Don't use too many things. You'll be better off because of it.
Right, and one final question for you, and this is kind of a broad one, but once again out of the chat room, what's the ideal amount of capital someone should consider, having before they trade full time? And he finds that people underestimate the amount of money needed. I guess the first thing you could say is that if you get involved in the Forex or trying to do any kind of short-term trading, the money that you do use should be money that you absolutely are willing to part with, and you should just write that off as zero investment, right away, because starting out trading is very difficult. What's your general rule of thumb on that?
Yeah. Step number one is make sure that it's money that you can, you're not going to pay the rent with, or pay your car payment, or pay whatever. So that's step number one. And as far as how much you need, we're all in different buckets from an economic and standpoint here in your trading. And what's most important is not how much you have, but how much you risk per trade. So I don't want someone with a $5,000 account risking more than 2-3% on any one trade. And if they have a $500,000 account, I still don't want them risking more than 2 to 3% on any one trade. And if they have a $500 account, I don't want them risking 2 or 3% on any one trade. The temptation is that if you have a $500 account, you go for broke. And if you really want to be successful in trading, that's not the mentality you want to have. You want to step forward, and if you're going to risk 2 or 3%, you want to try to make 4%. And it doesn't take that much in the foreign exchange market if you trade at key levels and you catch these trends that we've been starting to get more frequently here in the market. So I prefer to say that it's not necessarily how much you have in your account, but how you manage that capital, and don't risk more than 2 to 3% on any one trade.
Okay, all right. We've had Greg Michalowski on the line. He is Director of Client Education and Technical Analysis at Forex Live, joining us on Benzinga's Pre-Market Prep, brought to you by Charles Schwab. Schwab. Great. Greg, thanks for coming on today, and I hope to have you on again soon.
I appreciate it, and have a great weekend.
Okay. Thank you.